Well, it's my pleasure to welcome to the program Mr. Steve Georgy of Allendale Incorporated in McHenry, Illinois. He joins us by phone right now to talk about the markets as we wrap up our trading week. Steve, it's been a little while. Good to have you back with us here once again today as we analyze our market activity. You've been kind of a busy camper anyway. You had some other things going on with the company this week, huh?
We sure did. We had our big conference that we put on, and it's a webinar series that we do, and just wrapped that up yesterday, and we touched on just about everything. So it's good to have that behind us.
So what did they focus on during that event?
Well, big thing is we hit a lot on the grains as well as livestock, but on the grain side of things, just to kind of give a little recap, we feel that as we get into August, some of the biggest changes that you need to focus on is going to be what USDA's supply and demand report is going to do with the yield. We feel that USDA is going to have to drop yield. You look at good to excellent ratings, where they're at, there needs to be some change. We know there's problems out there. This idea of a perfect crop, Marlon, is just not there. And so there are issues. And on this report is going to be the first step USDA is going to take in order to really make adjustments for some of these issues.
So the next crop report is going to be coming up on August 10th, if memory serves me correctly, and that'll be the first one based on actual field visits, right? Field surveys?
That is correct. It's not just a guess anymore from USDA.
Okay.
They're actually going to take field surveys for that, yes.
All right, so let's see how the markets are holding up here today. Now remember, the end of the month is next Monday, so we don't have too much time left, and some traders have been talking about preparing for some, as they put it, window dressing at the end of the month, just to make the books look good. Let's go take a look at our futures trade here and see how things are holding up on this Friday. We have the corn showing a gain of a penny, not a big move. September up a penny at 3.75 1/4. December up a penny and a quarter at 3.89, and closer to the high than it is the low, but it's a very narrow trading range today. Now on the soybean trade, we traded firmer overnight, and now we have the August soybeans only 2 3/4 higher. September now up 3 at 10.03, and November 3 higher at 10.10 1/2, so it is at least higher on the day. We do have the wheat market in Chicago now showing a last trade on September of 4.86 1/2. This is interesting here, Steve, starting to firm up now, 6 3/4 higher on the day. The Kansas City market on September now trading 7 1/4 higher at 4.88 1/4. And then on the Minneapolis trade, we have September wheat now trading at 7.43. It's up 6 1/2 as well. The wheat tour announced their final yield estimates last night, I guess, when they wrapped up. And it looks like they came up with a yield of 38.1. That's a little over 8.5 bushels under the 5-year average, isn't it?
Yes, it is. And that is giving some more of a short covering. If you look what's happened in the wheat over the past week or so, we've seen a lot of profit taking. This market's pushed down to where it has kind of rested in here. But once again, as I was telling you about corn and beans in this USDA report, there are issues for wheat, and once again showing that, giving us a little boost here today.
Okay, I wanted to run through the cotton market here too while we're looking at our quotes. And in the cotton trade at the present time, we have October up 18 points, but December now down a couple of points at 68.87. It's kind of straddling the fence here on both sides of unchanged. Steve, while I have you on the line, I wanted to ask you about the fact that we've had the U.S. dollar kind of chopping around here this past week, and the crude oil market has been firming up here this week. Are either of those or both having any impact at all on the grains this week?
You know, not yet, but I do believe that we will start to see this become more front and center. If this dollar remains weak, that should be maybe a little friendly as far as commodities in general. We're seeing this out of crude oil. If the dollar remains where it is, that does open up our business for more exports, and that's really where we'll start to see that filter into the grain markets once we see exports start to pick up.
So the crude oil is higher today, 45 cents higher on the West Texas crude. It's priced at 49.49. So we'll see if that can offer a little bit of support through the corn market via the ethanol bridge. Let's take a look here also at what's going on in the heating oil trade if we could. That's how they price their diesel fuel in New York on the NYMEX. And we have August now 1.5 cents higher at 161.9 per gallon. Steve, we'll bring you back here in a moment, and we'll talk a little livestock trade. We're talking with Steve Georgy of Allendale. Come on back. We'll have more. Back with you, and we're talking right now with Steve Georgy of Allendale Incorporated in McHenry, Illinois. We're going to focus now on our livestock trade. And this livestock trade has been something very interesting to observe here this past week. Now, it seems like it has chopped around, but not gone very far either way from unchanged, basically steady levels that we had about a week ago on the cash market. Interesting trade, though, late in the day yesterday, Steve, and I've been asking a lot of folks about what maybe happened in that feeder cattle market there to take the spurs to it just maybe for about a half an hour late yesterday, and the live cattle market didn't even take part in that. Any word on what that was about?
You know, I don't have a lot from it. You know, and it was weird. It was just this very quick run. And as you mentioned, live cattle didn't really follow through. A lot of what's being talked about today, though, is Japan that's imposing emergency tariffs on U.S. frozen beef. And so this is where we are finding a little bit of pressure on that news. And, you know, we'll see how much this may escalate here today, but that's what's giving us more of this quick pressure here this morning. Well,
there was so much talk here a while back, and I'm sure you recall that they had that big announcement that China was going to be accepting U.S. beef as of July 1st. I haven't heard anything yet. Have you?
No. You know, the market is, and the news wires are extremely quiet on a lot of that. You know, and that is, I guess that story has been kind of put more toward the back burner, but you know, I have not heard a lot on that, and really there's, you know, that should be a bigger deal than really what we're seeing, but we haven't sent anything yet. There's a lot of issues still surrounding that. That was more of a headline story, but I haven't seen anything here yet.
Let's take a look at our live cattle futures and see where they stack up here so far this morning. Well, we're starting to see the pressure mounting here, Steve. August live cattle now heading a lot lower than where we were. We're down $1.70 at $112.60 per hundredweight. October down $1.63 at $111.95. Wow, now it's under $112. We're getting further away from that gap that was left on the chart here about a week ago. On the feeder cattle trade, this is the one that surged ahead before the close yesterday. Well, that's all gone. We have August down $1.50, September down $1.65 at $147.30. Is this just weekend profit taking, do you think, or what's going on here?
Well, I think the story of Japan is kind of it's more of this headline story right now, as I was mentioning, much with China. You know, but when they're looking at, Japan's looking at raising tariffs on the products, currently at 38.5%, up to about 50 cents, or 50% here increase. Or no, I'm sorry, 50 cents is what the story is reading until next March. So it's the first time in 14 years that they've taken some kind of emergency steps. And so it's affecting things and starting to give a little pressure here just from more headlines than anything.
So let's see if we're getting any spillover impact on the lean hog trade. Let's look at the futures over there. And right now, we currently have August down 27 at 81.98. So it's under $82 now. And October down 56 at 67.12. December down 50. Steve, earlier, real quickly here, earlier we noted that the hogs seem to be in kind of a coiling pattern, and they thought they might break out one way or the other. Have they done it yet or not?
You know, they really haven't yet, but we are starting to see some of this cash market start to become a little bit weaker. We know there's larger numbers out there, but the trade is still chopping around. We have not broken out either side of that and may remain very choppy here for the next week or so.
Well, thanks again for joining us. I hope you have a terrific weekend, and good to visit with you. We'll talk with you once again soon. Steve Georgy happens to be with Allendale Incorporated. Great guy to talk to if you want to get in touch with him. He's based in their world headquarters in McHenry, Illinois. Lots to talk about, and the cattle market suddenly taking a swan dive here.
Well, thanks for getting the Friday started for us nonetheless.
We'll watch it.
Thank you very much, Marlon.